Hi, Carl, again. And yes, joining me here in Washington at our bureau is the ECB President, Christine Lagarde. Great to have you here. Welcome.
Lovely to be with you, Sarah. Good morning.
It's nice to see you again. Nothing to talk about here at the IMF meetings. Trump's tariffs are clearly front and center. I am curious how much it's changed your view on Europe's trajectory.
Well, it has an impact. And we were at a stage where all the previous shocks that we have taken, from pandemic to energy crisis to very high inflation, were really fading away, and the disinflationary path is clearly on its path as we had expected. And then a series of shocks hit our screen. Number one, the tariff. Number two, important as well, is the whole defense momentum that is taking up in Europe and which has led, in particular, Germany to increase significantly its commitment. And number three, and this is really a result of the tariff announcements and subsequent developments, structural reforms, which Europe had been talking about, which had been described in various reports, which Europe is now saying, OK, now it's time and it's Europe's hour to actually do the things that have to be done. So it obviously has an impact. Some of it positive, some of it negative. I think on the growth front,
sure,
we've always said that it would be a lose-lose, and we're seeing it.
I'm curious what your reaction was when you saw President Trump unveil those so-called reciprocal tariffs, and that 20% tariff was coming on all European goods into the United States. What were you thinking?
I try to look at things in a very positive way and focused on my mandate. That's what I have to do, and that's what a central banker has to do. So I look at that and I think, OK, where are the vulnerabilities? Who are the trading partners with which we deal most? And how do we address vulnerabilities if we have them? And how do we secure those trading relationships anyway? And when you look at it, Europe is difficult to understand. For most people, there's Germany, there is France, there is Italy. But then there is Europe. And Europe is the federation of 27 member states. And if you look at trade, 65% of our trade is intra-Europe. So our Europe's main trading partner is Europe. So that's number one, which means lower the internal barriers to make sure that trade really moves around both in goods and services. And services matter enormously. So that's, point number one. Point number two, we have to be attentive to the developments of the relationships between the US, the rest of the world, the US and Europe. And we have seen very successive movements, announcement and then a pause and then some exceptions. So we have to be very attentive. We have to be agile in the way in which we respond, and that agility means that we have to be ready to take action. Either we cut, either we pause, but we will be data dependent to the extreme.
Well, OK, I'll get to monetary policy in a moment, but just
sure,
on the trade talk. So now you're at 10%, and there's some breathing room to get to some sort of trade deal. How do you see that?
I'm not sure we're 10%, by the way, Sarah, because we still have higher rates on aluminium and steel and the car industry.
Okay. So I was talking about the blanket.
Yeah.
But yes,
but if you look at the real tariffs in the relationship between Europe and the US, we were at around 3%, and we moved up to 13% more. We were a little less than 3%, actually, on goods. So it does increase the tariffs, yes.
So how do you see it playing out, these trade talks? Is there scope for a negotiation, for a deal?
I am sure that there is scope for negotiations. I mean, it's in the nature of policymakers to want to sit down and argue their case and point out their imperatives, their red lines, their vulnerabilities, and I'm sure that there can be a dialogue. I would be surprised if there was not such a thing. It will be a process, let's face it. But I think that there will be negotiations, yes.
You said that the intra-Europe trade is most important for Europe.
Yep.
What about the U.S., European trade? How exposed is Europe, really, economically?
Well, as I said to you, it's of the non-intra-Euro area trade. Okay, so 65% is Euro area and European Union. But of that non-Euro area trade, the US is 17%. Okay, so it's not a gigantic movement of goods and services. By the way, really it's important to remember that we ship back and forth goods. We ship back and forth services. And if the US if we have a surplus in goods, the US has a surplus in services. Right. So it's not a complete wash, but it's a lot less than the numbers that I've seen floating around.
That's one of the fears, actually, is that Europe can punish the US on the services front, taxing digital ad revenues, for instance, in Europe. Is that something that you think is realistic?
You know, there will be a negotiation process. And as part of the negotiations, people show their strength, keep their cards close to their chest. They drop them as and when suited. I'm not privy to that. And I'm sure that there will be a will to negotiate. That I'm certain of.
The president has repeatedly said that Europe has been ripping off U.S. automakers, for instance. I mean, has Europe been unfair to American industry?
I really don't think so. There is so much, joint interest between those two economic continent, if I can call it that way, because Europe is a vast economic region, 450 million consumers, very advanced economies altogether. And there is a lot of foreign direct investment between the two countries. There is a lot of trade going on, goods and services. So there might be sectors where a serious negotiations need to be had. But it's going to be, as always with trade. You know, I was trade secretary for 2 years of my public life. It's unbelievably complicated because you have thousands of, I think it's more than 8,000 lines of custom duties for all those products. And of course, it's going to require a tedious, serious work to get down to what is acceptable to parties and where the vulnerability points are addressed. And it's not just on one side, it's on both sides.
You were also head of the IMF. I feel like you do not like tariffs. Is that true?
I'm a free trader by sort of nature and practicalities, because free trade has always enhanced the overall growth, has been a serious contributor to the development of the economies, all economies. Then how it is distributed, how the benefits of trade are distributed in any given country is something for that country to decide. But I think that if you look at the aggregate, yes, trade has always been beneficial.
It's interesting, as a result of all of this, the euro has gotten stronger and European markets like Germany have outperformed U.S. counterparts. Why do you think that is?
You're correct in that it's a bit counterintuitive. Initially, and when we had done our projections, we anticipated that the dollar would strengthen and that the dollar would appreciate, the dollar would appreciate, the euro would depreciate. It's not what we saw. And there have been some counterintuitive movements in various categories. Currency is certainly one. The German market has obviously been shocked in a positive way by the program of the soon-to-be put in place German government, with the commitment to defense, with a commitment to a big fund for infrastructure development, with the debt brake being put aside when it comes to investment in defense. This is a major push in the direction of let us spend the money that we save here. And there's a lot of saving in Europe to make sure that the infrastructure works better, to make sure that our defense, which is a vulnerability, is improved. So that's hardly surprising. On the euro, and it really reflects on the fundamentals of Europe, on what the confidence level is with respect to Europe. Europe is, I think, associated with freedom, free trade, we just talked about it, stability of prices. I think we are working as hard as we can to deliver that price stability. And credibility. Sometimes we are criticized because we are overruled. Oh, too much regulation in Europe. Well, sometimes to stick to those rules and to apply the rules gives a level of certainty, sometimes cumbersome, which is why simplification is very much in the cards, but it reflects.
Do you think there's a credibility question with U.S. assets right now?
We have to look at where the markets are going, and I don't think that I could pass a judgment on that. It's a matter of how investors behave.
So euro strengthening, is it getting too strong? And if it continues to strengthen, what sort of options would you look at? Would you consider intervention?
I don't comment on exchange rate. And obviously we monitor, and obviously we take that into account for purposes of identifying inflation and the risk that we have.
Well, it should help with your fight on inflation. I mean, you sound pretty confident that you're going back to 2%.
Yeah, we are. The latest reading was 2.2%, and I think that we're heading towards our target in the course of 2025. So that disinflationary process is so much on track that we are nearing completion. But we have the shocks,
right?
And the shocks will be a dampen on GDP. It's a negative shock to demand. The net impact on inflation will depend on what countermeasures are eventually taken by Europe. Then we have to take into account the fiscal push by the defense investments, by the infrastructure fund that we talked about, and the impact of the structural reforms. But I think it's an interesting composition and a fascinating moment to observe how it's going to impact and hopefully be executed.
I guess my question on policy then is downside risk on inflation, at the same time downside risk on growth and a potential growth
I would put
shock.
it the other way around. I think downside risk on growth, which I think is pretty much a given, and not just in Europe, by the way. The net impact on inflation, I think we need to continue checking the data, because whether you look at the very short term, whether you take into account the countermeasures, whether you anticipate some increased trade of Chinese goods into Europe, all that will have an impact. So I can't say definitely downside risk materialization on inflation. We have downside risk in the short term, but the net impact to be
TBD.
To be seen.
I get, because my question was going to be, why aren't you cutting maybe faster or even larger, given a more benign inflation backdrop and bigger risk to growth at this point?
As I said, the net impact on inflation is to be seen. There is too much variables coming into play for that purpose. And as I said, we have the options on the table. We will be data-minded, data-dependent, not data-minded, data-dependent. And in terms of options, we may well cut. We may well pause. It's really going to be meeting by meeting, data dependency. We have, the criteria of our monetary policy stance well established. It has served us well so far. We will stick to that and will be as predictable as is possible with the data that are coming in.
You've gotten props from President Trump last week and then again this week for cutting 7 times at a time where he would like to see the Federal Reserve cut interest rates. What was your reaction to that post?
Monetary policy decisions are driven by the economic circumstances that we face. And I think that all central bankers around the world are loyal to their mandate and observing the facts and analyzing the data as well as they can. This is what we've done in Europe. We have inflation coming down seriously. As I said, last reading 2.2%. Our projection for 25 is likely to be 2.1%. Inflation expectations are very anchored around the 2%, including in the medium term. And we have growth, which is projected to be 0.98%, depending on whose projections you're looking at. The US is a different situation, and the impact of tariffs will be different on the two economies.
What is your expectation there? Higher inflation
in Europe?
In the US?
I think the IMF came out with some projections this morning, and they did increase the inflation projection for the United States. But it's inevitable. If you raise tariffs on goods coming in, this is increasing prices, added to which it creates uncertainty. So the combination of the two is bound to wake up a little bit.
I know you're close with Chair Powell. I mean, I know you communicate pretty often. Have you talked to him about some of this new political pressure?
We're both used to political pressure. in one way or the other. But as I said, I have immense respect for the work that he does and for his loyalty to his job and to being as diligent, disciplined as possible to deliver on his mandate. For him, I think, I'm sure, as it is for me, the mandate is our compass. We have to deliver on our mandate.
If there is an attempt by the executive branch in this country to fire Chair Powell before the end of his term, do you see that as a material risk to markets?
I very much hope not.
Hope that doesn't happen.
Hope that it is not a risk.
What would it mean for the markets?
Look, I'm not going to comment on, market reaction to hypotheticals that I hope are just not on the table.
Understood. But speaking of some of the reaction here, I'm wondering how you're feeling about the European banking system, if there's been any spillover, considering some of the financial stress we've seen as a result of these announcements.
We haven't seen spillovers. And what I can say is that under the regulations that we have, which is Basel III, with reference to a Swiss town in which we meet on a regular basis, but which has brought all the regulators and sometimes the supervisors as well together to make sure that we don't have a cataclysmic disaster like we did in 2008. I was there. I don't want to see that again. So our banking system is, I think, solid. The banks are far more better capitalized than they were before. And I think the probably more scrutiny applied to supervision than was the case at the time has served us well. And we should really abide by those principles. Not always pleasant, not always, stress testing and scrutiny is always resented because you want to run your business. But to the extent that it is conducive and critical for financial stability, we need to do that.
I think you mentioned increased trade with China in one of your answers as a potential impact on Eurozone economy. I'm curious what your expectations are there. I mean, a potential trade deal with China, is that something you could envision?
That is something that the European authorities in trade, that is the Commission, will have to decide and will have to conduct. But it's an economic natural consequences or second round effect, if you will, of very strict and very high tariffs imposed by the lead partner of China. China will face a moment where it has overcapacity and it has to ask itself, what do I do with that overcapacity? Where do I sell my goods?
And you think Europe is a destination?
It's one option for them, for sure, but it's not for me to speculate what they're going to do with that. And I hope that a trade deal will be something that can be considered by both partners, the United States and China.
I mean, there's an effective trade embargo between them now, 145% tariffs, 125% tariffs the other way. How disruptive is that for Europe and for the rest of the globe? Just those
I think
two?
It's too soon to say. It's too soon to say. But they're hopefully, as I said, there will be a trade deal between these two economic giants. And that will be acceptable or not too unacceptable for both partners as deals are. But as far as we're concerned, we're going to focus on our business and make sure that our economy is competitive, that our regulatory environment is rock solid but simplified, that we have a stronger and wider capital market union, and that we address all our vulnerabilities as they have arose as a result of the shocks that we're seeing.
It's such a change. When we spoke in Davos at the beginning of this year on a panel, the concern around Europe was Europe is uncompetitive. Europe has too many regulations compared to the U.S., which is exceptional now, with deregulation, pro-growth policy. It feels like the tables have really turned. But long term, I do wonder if those questions are still going to plague Europe.
We shall see. And time will tell us whether this sort of whether the Europe's hour that I very much see at the moment will turn into a new Europe that is more competitive, less regulated, more efficient, keeps some of its savings at home to invest in what is necessary.
Is that realistic?
Defense, energy.
So many governments.
It's hard. It's hard. But look, whenever we had major crisis, whether it was in 2008 with the great financial crisis, whether it was with COVID, the Europeans, rolled up their sleeves, pulled up their socks, and delivered something that was totally unexpected. The Next Generation EU 1 trillion investment, which is being spent at the moment on a joint basis with joint borrowing, we would never have dreamed of this. Well, I think that this is another time when Europe can just grow up and be stronger.
But we are in a technological revolution at the same time, and Europe doesn't have a ChatGPT or Google or an Apple or a Meta. Why is that?
I think it has to do with the fact that there was not so much focus on productivity. So that's number one. Number two, the ecosystem that is so vibrant in this country, in the United States, which combines equity funds, capital venture funds, the innovation around universities, which have played a critical role in those inventions. All that combined created those ecosystems that gave birth to these giants. I think those are conditions that can certainly be recreated. And if Europe is as attractive as it is, with freedom, with stability, with credibility, and the determination to execute on the plans, I'm sure we can do well.
What about...
There are other areas, by the way, where Europe is a champion, but I don't want to brag about Europe. I just want to make sure that...
Well, it's your job.
We do.
You have been a champion of Europe, steadfast champion, which is why you're in the job, I think, in part. But what about a potential end to the war in Ukraine? I mean, now that there's this U.S. diplomatic push, what would that mean for Europe's economy?
I think what it means first is peace for people who've been at war, and in particular peace for the Ukrainian, who've demonstrated their aspiration to freedom and their determination to fight for their territory and to defend their country. That's what it means first and foremost. Then, provided that happens, and I very much wish that peace will be about, then it will be reconstruction. And it will mean, supporting, helping, dealing with the needs that Ukraine has, and processing the application for European Union membership, which is something that has been decided.
What is your chief mission here in Washington this week? I mean, I feel like the bilateral meetings take on a new importance.
To meet you, that was my first mission.
Besides that, of course, thank you for the time on that. But seriously, as far as talking with U.S. counterparts, how do you think this whole trade situation changes everything?
I think we will go through a period of at least, I don't know how many are left, but probably, 75 further days of trade talking, negotiating, behind curtains negotiations, and I'm sure that there will be plenty of that during this week, but not only during this week. And that is unsettling, because it's a period of uncertainty that nobody likes. You don't want to invest, you don't want to employ, you don't know where you're going to go in terms of economic development. So that is taking place, and I think that at the end of that period, we need to have a system which at least is predictable, is reliable, and those are really very strong wishes that I have, and that things will not change every other week after that.
Is that why you don't have a recession forecast? Because you think that'll happen?
We had a recovery that was sort of taking roots, and hopefully, given the fact that we have this large economic zone, that we trade amongst ourselves a lot, that we're going to expand the trade relationship that we have. Europe is the first trading partner with 72 countries around the world. This is no small potato, and we're going to activate those trade links as much as we can. So we don't see a recession. No, we don't.
In Europe or the globe?
I'm talking about the euro area for the moment.
Well, Christine Lagarde, thank you so much for coming here first in Washington and spending so much time talking through all these events. Appreciate it.
Great pleasure.
Always a pleasure. Christine Lagarde, the head of the ECB.